Take a quick look at the economy with GDP growth in excess of 6% and the sub-Saharan which is of course above the sub-Saharan Africa average. Nigeria is widely seen as the top investment opportunity on the African continent. To discuss the prospects for the economy in 2014, I'm now joined by Abiola Razak, team lead research at UBA Capital. Thank you, Biola, for joining us. So of course we've heard the story, a lot of people bringing investments into Nigeria. It's one of the top destinations for foreign direct investments on the continent. But let's talk about the prospects going into next year. Your thoughts about that GDP growth trajectory. There's a sense that it's likely to begin to pick up again. Some people say we should see over 7% next year. What do you think?
I think Nigeria is still very hot from the perspective of GDP growth and of course from other fundamental that we actually look on the Nigerian economy. I think to start with is the GDP growth itself. Like you mentioned, Nigeria is still growing around 6.4% based on our projections for 2013. That's about 2 times the global economic growth. And of course, that's still far ahead of the growth outlook for the Africa as a continent. But beyond that GDP growth, I think it's important to actually say that, yes, we've seen some slowdown in terms of GDP growth coming from about 7.6 and 7.7% about 3 years ago. And we're down to about 6.4% outlook for 2013. But in our own view, we think that will actually bottom out in 2014. And we should begin to see Nigeria economy pick back to 7% region. But
right.
I think it's important to actually say,
in your view, what will drive that growth?
Which is why I said it's important to actually look at the composition of the GDP itself beyond just the numbers. If you look at the GDP growth in Nigeria today, there has been a significant structural change over the last 3 years, particularly in terms of the composition of the economy. For example, you've seen significant improvement in terms of the contribution from the telecom space, for example. Between 2010 and 2009, the telecom space typically accounts for less than 6% of the economy. Now that's about 8.4% of the economy as we speak today. The same thing has happened in the real estate and the construction sector, of course, which is growing at a double digit over the last 3 years. So in our home view, we think these are new growth posts for the Nigerian economy. And of course, in as much as we continue to see increasing urbanization in Nigeria, and we continue to see continuous reforms in the agricultural sector and of course, in the services industry, we should begin to see more contribution from these sectors of the economy, which I call the new growth posts in Nigeria. So for me, I think these are new growth posts that we need to actually look out for in 2014 and beyond.
Right, Biola, like you mentioned, reforms in the air. Like you mentioned, agriculture is a key element of that. But let's talk a bit about other macro issues, particularly the currency. We've seen the central bank step to the plate and done a pretty decent job given where other currencies are on the continent. The Naira is clearly outperforming the likes of the South African Rand. But going into 2014, do you think that can be sustained? Do you think that stability of the Naira is something that we can expect next year?
We believe Nigerian currency, Naira, will still be very stable in 2014 from the perspective of the trade-off that the CBN has actually made in terms of the high interest rate environment. You remember very well the MPR, which is a monetary policy rate, has actually been at 12% since 2011 October. I think that's a significant trade-off on the part of the CBN. So the CBN has maintained a high interest rate environment for them to be able to stabilize the Naira, and I think that has actually worked well. Beyond that quantitative monetary policy measure, I think it's also important to look at the administrative measures of the CBN, which I personally think are actually more effective in stabilizing the Naira. For example, the change from the WDAS auction to the retail Dutch auction system, I think that's been very, very effective, at least based on what we've seen over the last 12 months in the market. Naira now, to a very large extent, CBN has a better control of what the level of demand is in the market, and of course the CBN has been able to meet the supply. Not only that, I think the RDAS auction also gives the CBN more ability to actually filter the genuine demand as against the speculative demand in the market. Right. So to a very large extent, I think we still have the significant buffer in terms of the reserve to actually stabilize the Naira. And of course, in as much as the CBN still continues to maintain a hawkish monetary policy stance, I think the Nigerian currency should be stable over 2014. Yes, there are a lot of concerns, particularly from the political perspective. We've seen, for instance, the fiscal hand is looking at possibility of a mild devaluation in the Naira to get more money out for the budget. But I think the CBN, to a very large extent, is still very firm on maintaining the stability of the Naira, which I think is good for the economy.
Of course, a major change next year is the fact that Central Bank Governor Sanusi Lamido Sanusi has already stated he will not seek a second term. So clearly it will be interesting to see what that means for the Naira. But staying with on the topic of the Naira, a lot of people have suggested that what we've seen is that Naira is perhaps maybe a little stronger than it needs to be, and there's a big risk that at some point, especially if if we see some shocks globally, that the naira will have to devalue significantly or sharply at some point. And given what we've seen in the past, everybody remembers 2008. If we're to see that now, how bad can that hurt the economy right now?
I agree with you. There are still some uncertainties in the global economy, particularly in U.S. When the U.S. begins to taper the stimulus program, I think there might be possibility of some outflows in terms of foreign portfolio outflows from Nigeria, particularly in the fixed income market. And of course, based on the figures that we have, the foreign portfolio inflows into the fixed income market as we speak today is in excess of $5 billion. Of course, by the time you take that out of the about $45 billion reserve that we have, we're down to about $40 billion. I think that's a concern that we have to look out for. But I think it's also important to actually note the fact that beyond the reserve, I think there are some improvement in terms of the current account balance, which I think is also very important for us to look out for. Beyond that, don't also forget the fact that Nigeria may actually get some savings in from the inward-looking policies of the government. For example, if the refinery from Dangote does come on board in 2015, I think that might actually have some about 20% savings in foreign currency that we actually spend today in importing refined products. Refined oil products. So I think that's a significant savings that we may have in there. The same thing goes for the agricultural sector. If some of the reforms that we have for the sugar industry, the maize industry, and of course the entire agricultural value chain does come into play, I think we may have significant foreign exchange savings from that perspective. So I'm looking at it from balancing the risk with some of the opportunities that we may see in Nigeria over the next 2 to 3 years, which is why I personally think the risk to Naira is not as much as people have actually.
All right, so you just highlighted possible FX savings as a result of some of those reforms that hopefully would begin to reflect in the economy next year. But let's talk a bit about something that is clearly still a big issue, the issue of oil theft and the impact it's having on oil revenues. We've seen that continue to be a major issue that a lot of people looking at Nigeria continue to mention. How worried are you about this development and what it could mean for the economy next year?
I think to a very large extent, I look at it more from the fiscal side as against the economy as a whole. You remember very well the significance of the oil sector to the Nigerian economy has actually reduced over the last 3 years. For example, before 2010, we used to have the oil sector contribute about 18% of the GDP. Now that's down to less than 13%. So the most impact is actually on the cash flow of the government, particularly the federal government. And I think the major opportunity that the government has today is to actually generate more tax from the non-oil sector of the economy. For example, the non-oil tax in Nigeria today accounts for less than 20% in terms of the revenue that we generate from non-oil tax sources. It's then that 20% of the GDP. That's significantly low. So there's significant headroom for the government to actually raise tax from the non-oil sector, which I think is what the government needs to look out for. Beyond that, I think the government is also working very hard to make sure that at least the theft that we've seen in the oil and gas sector is moderated over the next couple of years. I think that's to a very large extent will be corrected. We've seen some level of correction in the past 1.5 months, and I think if we see a sustainability of this correction in terms of reducing the theft that we've seen in the oil and gas space, I think we may begin to see increased output, and of course that's to a very large extent to provide some cushion for the government. Particularly that I personally think oil price will remain above the $100 per barrel, particularly now that the European economy is beginning to look up again.
Okay.